This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good afternoon, everyone. Welcome to today's Daily Recap. I'm Evan Lazarus. I'm CEO of T3 Live, and I'm filling in for Scott on this beautiful Friday afternoon. So the market has done what it has done consistently for the last 6 or 8 months, and that it has continued to fool most of the people most of the time, and it's been notorious for this trade. This trade has lasted for a very long time, and it has all the earmarks of what a channel is. A channel is a consolidation of price over time, and this channel has been very, very challenging. In that, challenging obviously when you look in the rearview mirror. Everything seems crystal clear. But as it's happening, I think people have had expectations that when we get into the upside resistance that we're going to get follow through and we're going to see higher prices. And that when we get into the downside that we're going to get follow through and see lower prices. So trying to trade a break of this range has presented many traders, has been problematic for many that are directionally inclined. The market is basically non-directional. Our 21 EMA, both here on the daily and as I go up a time frame and I flip to the weekly, the market is getting, although we have seen this large jump in price from last week to this week, albeit on declining much lower volume, you can see that decline in volume, we still remain pretty much trapped in this range, and the range has basically the upper and lower, area. So we still contain trapped in this upper segment. Will we break this range and go higher? I don't know. And I don't think anybody knows. I don't think it would be fair to say yes. Every time we've gone down this road, and we've even gone so far as, have taken out highs, much like we did a month or two ago up here, where we actually made new closing highs. The market had as a result of no volume at new highs, and you can see that declining volume as the market was sitting at new highs. Failure in volume and failure in price. You need volume to support follow through. Volume is the key here that will drive this market higher, and clearly, as you see here, as we were trading on the lows, you saw, spikes in volume, and then, now back at the highs. There's really no uptick in volume here, which is very concerning. And I do think so long as we sit up here and we don't have that volume surge come in, this is going to make this area a challenging area to get involved with. In a matter of 5 trading days, the market has rallied from basically support into now resistance. And as we time down and I show you smaller time frames, I'll actually show you a 30-minute chart. A lot of these gains, coming from overnight gaps. We gapped up, and we gapped up. So there's been a lot of overnight taking this market higher, and today's a good example of how challenging it's been. Today pretty much gapping up and trading sideways for the bulk of the entire session, maybe until the last hour or so. But the market is now in an area where you have to respect, you have to respect it. That's really all I can say. This is the area that's proven to be, the challenge. And there's going to be tons of people that are going to say, this is the time, we're going higher. A lot of the, we're now in earnings season, and it's been a pretty decent earnings season. You've seen banks, perform well. J.P. Morgan, back at highs, and banks overall tend to look like they potentially can get higher here. Obviously, every stock will have its own agenda based on its, as it reports earnings. But more or less today's, price action driven by a lot of the earnings trades. Yesterday was Netflix. Netflix gapping higher. If you look at actually, if we go up to, let's say and I typically don't spend too much time looking at these charts, but the monthly, right? Here's your monthly of Netflix. This is a stock, and I am looking at it on a log scale. This is a stock that may have a little more upside left in it, but I think it's probably into an area where you got to be careful about what you do up here. Chasing these types of moves, and I'll bring up Google. It's great if you can participate in this kind of a move, but Google is an example of a stock that for the better part of 2 years, let's just say, has been in this range, however you want to define this range, where it's been consolidating since the beginning of 2014. And over the last, 3 days has really, has really just gone straight vertical. And you can see over the last, let's say, 4 days, has gone vertical with earnings, driving this stock up, pretty significantly. And as such, taking the QQQs to new highs. So with Netflix and Google, powering like that, the QQQs are seeing new highs, whereas the spiders and some other indexes are sitting at prior highs. But be careful. This is for any trader that's been around long enough. This is a great type of trade if you're a short-term intraday trader. But the further you stretch this rubber band, when it does eventually peak, it is going to snap back, and it is going to snap back most likely hard and fast. It's like throwing a ball straight up in the air. You go straight up in the air, well, eventually it's going to peak. It's just as easy to come straight back down. So I'm not suggesting selling this. I'm not suggesting anything other than not chasing. Really, that's what I'm saying is, I know it's tempting to want to be in some of these trades as they go, vertical in a very short time period, but doing that can lead to really, really bad situations. I've seen it more times than not. If some of these stocks that are reporting set up again, Google, this is going to take a few weeks, if not more, to set back up again for higher prices. Doesn't mean it won't go higher Monday or Tuesday, but the bigger picture is that if the stock is going to see a much larger move higher, now is not the time to be a buyer. So, if like I said, if you are throwing caution to the wind and you're buying these stocks and holding them into earnings, congratulations. However, I would say that, more times than not, this is not the norm and in what you're seeing. So just kind of take, the price action as you see it, with a grain of salt, and make sure you approach it with a rational, realistic, objective, viewpoint, in that it's great to participate from an intraday standpoint if you're an intraday trader. But if you're not that, be careful about jumping into these things wholeheartedly and chasing this vertical price movement. It was a pretty quiet day today overall. The strong remain strong. The Amazons, Apple, snapping back. Apple has earnings coming up, so it should be interesting to see what that one does. Facebook, another one that has kind of jumped pretty aggressively and gapping up again today. But on the other side of that, you have, oil stocks, energy and oil. You look at stocks like CVX, Chevron, and ExxonMobil, not really showing you any type of buying or so. Energy and oil to me still looks very, very weak. Overall, healthcare was a little mixed today. Johnson & Johnson not really participating. But then you have biotechs on the other side. IBB, making new highs today, and you have stocks like Regeneron that are acting well. So there's definitely the haves and have-nots here, and so depends on whatever your cup of tea is. If you like to be on the short side, there's definitely stocks out there to look to sell that are showing downtrends and continued weakness, And for those that are looking for more upside, and there's definitely plenty of stuff out there to trade that has pattern and opportunity and trend. So make sure you approach this market with that slant. And I think in the long run, ultimately that's probably the best way to approach any market. And that's going to wrap it up for today. I hope everybody had a great week trading. Earnings season is always a great opportunistic time for those that are active traders. And I'll talk to you later. Have a nice night.